Livermore had a number of ways that he saw it, and so did Wyckoff, Richard Wyckoff, who first wrote about Livermore in the Magazine of Wall Street back in the early 1900s. And he had what he called pivotal points, which were turning points coming off the bottom that he would look to buy into. Now, these days, I use a setup I call the undercut and rally, where a stock undercuts a prior low. Sometimes it's a major low, sometimes it's a near-term low. But essentially what that does is get everybody bearish. And you look at a lot of charts and you'll see there's this phenomenon I call DBOV, down big on volume. You'll see a stock getting hammered for a couple of days, huge volume. And then it bottoms and then it undercuts a prior low. Everybody's bearish and it turns around and goes up. I will buy that coming back up to the prior low. And then I use that prior low as my selling guide. Now, once I start to see these types of setups fail, in other words, they fall back below that prior low, and you start to see this more frequently than what you're seeing right now, where you see these undercut and rally type moves actually work. And sometimes the stocks head up right back up to new highs. You look at something like Bill.com, for example. That's a great example because you can see how this one came down. It had a little double bottom, undercut a low there under 100. That second low was somewhere around 94, 95, and then you undercut that, and then what happens? You turn right back around, and then notice that second low, and this is in early November.
What's the symbol on this one?
Bill.com, BILL, and this is a type of setup that works quite often and quite well, and this is probably my primary setup. I'm buying the weakness when everybody else is getting bearish, and usually the market is looking pretty ugly at the time. But that's usually how these things set up. It's a completely different market, in my view. You don't have the traditional drivers of institutional accumulation. You don't have mutual funds in there steadily building positions because you're getting these huge money inflows, these steady inflows that we used to see back in the 90s and early 2000s. So I think a lot of this is driven by machines. So it takes on more of a contrarian sort of flavor. And if you look at this one, so let's see, you guys have 4 charts. Okay, the upper right chart, you can see the undercut of the low around 95. And you see how that low, you don't have volume on there, but if you saw the volume, it's huge volume, huge selling volume. So it looks like it's busting support and it's going lower. But what it does is it stops and it consolidates very tightly sideways for a few days, and then it takes off. And most people will scratch their head looking at that type of setup. But to me, it makes perfect sense because that's how this market rolls. So I don't really chase strength. I don't wait for strength. I look for weakness, and then I look for the setups that I will use. I also will use shakeouts at a moving average, which you can get real technical and call that a moving average undercut and rally, but we can also just call it a shakeout. And you can see these all over the place. I mean, gold just shook out at the 200-day line.